folks. The Mint Build Business series is back. And today I have a very, very interesting guest with me. Vibha Padalkar leads HDFC Life as the CEO and Managing Director. She's a chartered accountant and has been in the company for a long, long time. In fact, since 2008. Previously, she had varied experiences in a leading BPM company, in the FMCG space, and even in a leading international audit firm. She's come through the ranks at the insurance company and risen to the very top. An interesting industry, an interesting CEO, and an interesting conversation lies ahead. Vibha, welcome to the show.
Thank you so much, Jaideep, for those kind words.
Wonderful. Great to have you with us, ma'am. I wanted to start by just touching upon the fact that, the insurance industry in India, of course, growing at a steady rate, but especially on the life side, our research tells us that India is a terribly underpenetrated society. People really don't appreciate the importance of life insurance products. Most people see it almost as an investment. So I wanted to just get maybe an opening remark from you on that. And of course, how HDFC Life and some of your peers are kind of working to change that. Over to you.
Very, very valid point, because we started off with only LIC being there for many, many years, almost over 5 decades. And then we were the first ones at HDFC Life to get the license. This is 21 years ago. And since then, it's been a journey of innovation. Yes, the participating products, as was known at that time, which are money-back policies and some of the other policies like that, are still relevant today, and we do sell those products too. But when you were to look at the changing demographic shifts, socio-economic shifts, disintegration, if you like, of the joint families, at least in the bigger cities, aspiring millennials, the pandemic, which meant if you were to look at the shift today from being almost 100% participating background during LIC, today we sell about less than 30% or thereabouts. Everything else is new. And if I were to look at what do we have, protection is right in the center of things, when it was not even understood properly, or the need was not certainly understood. Today, we are looking at anything between 8% to 14%, depending on how you measure it, of our new business. If you were to look at interest rate guaranteed products, which are to say that this is what I will have post-retirement, wherein the company can't reprice it no matter what. So that gives you a lot of comfort. If you were to look at annuities, again, today about 5% on an weighted basis is annuity business for us. And annuities, the way we market it is to say my first salary after retirement. So senior citizens are easily outliving their retirement age by say 20 years, while inflation still is very, very relevant and will eat very meaningfully into their savings. So that is now understood very well. If you were to look at credit life, or partnering with banks and small finance banks and microfinance companies and so on, wherein credit offtake has happened. Again, this is a relatively new phenomenon, maybe the last couple of decades. So we also provide insurance for people who are borrowing, because the last thing that a borrower wants to do is that in an unfortunate situation, you don't want to leave liabilities to your loved ones. So covering that with insurance. So really, it's many, many, many relevant innovations. And HDFC Life has been almost known as a product factory and innovator to bring new products, as a lot of new dynamics that we see in the Indian situation.
And in doing so, I also noticed that, it's of course in the public domain, the fact that HDFC Life has also been acquisitive and used the inorganic kind of route to also grow. And I guess, as per what you folks declared to the markets, the Exide Life acquisition most recently was really to strengthen your footprint in the southern region, right? And I guess also to get some of their products into your portfolio and so on. Tell us a little bit about how that's worked out a few months down the road now.
It's worked out thanks to the regulators very well. We already have got our approval, and now it's our 100% subsidiary in record time. So thanks to both CCI and IRDAI. And soon we are hoping that it would be merged and there would be one insurer. And like you said, we've been looking at both organic and inorganic growth. We've looked at many, many opportunities, and this is the first. There will be more. we have the appetite, we have the balance sheet, and we will also do it sensibly so that it is accretive and there's some niche aspect that would be additive to our business. So right now going very well. Excite Life, just to give you some numbers, has grown over 30% versus in this year versus growth of the private sector and overall by about 20%. So that also is trending well while in the midst of an acquisition.
That's wonderful, and congratulations and best of luck, because I know it's a long journey ahead over there. Let me just pick up on that a little bit and take it forward to the next step. Because one of the things that you folks declare as a pillar of your sort of business strategy is the notion of diversified distribution, right? Now, in the recent past, when Policy Bazaar did their IPO, their CEO is on record to say that a major part of their proceeds will actually be utilized towards building offline distribution. And it's another instance in some ways that the Indian consumer is bending the industry to their will rather than the other way around. And HDFC Life, I imagine, has an omni-channel sort of strategy. Tell us a little bit about that and how digital channels are being incorporated into your traditional business model here.
Yeah, so we have to be where the customer is, and gone are the days, as you rightly said, wherein the insurer as the manufacturer sits and says, customers will come to me and there are distributors in between, more as a facilitator. And it's really becoming omni-channel, like again you mentioned. And so even our channels are morphing. So if you were to look at our bancassurance channels, it could be an HDFC Bank, it could be a whole host of our other partners, wherein it was known as a traditional channel, but now large chunk of business is through their digital offerings. So digital is now becoming a horizontal than a vertical. It started off as being a vertical. So you had all your traditional channels, and then you had web aggregators, you had our own online channel and so on. We had our direct channel, but now it's an offering wherein really even the most traditional of our channels, which is our agency channel, thanks to the pandemic, has really accelerated in terms of our outreach to customers as well as servicing to customers. And as more and more younger people join our fold, that's only going to intensify. And also thanks to some of the other buying behavior, thanks to the pandemic, wherein a large chunk of even people in non-metros are increasingly comfortable not just buying their groceries, but more importantly also dabbling into financial services products. And so it's becoming almost any place, anytime, in any mode that the customer, and hybrid modes. So he might start off a journey like all of us do. Say you're watching any of the OTT platforms, you start off on one device and end up on another device, ending the movie that you're seeing. Similarly, he could start off by call and he could end up doing his own on his app. And then later on are servicing similarly. And it's not just him, but with 360-degree view of the customer, it could also be a close family member. So we know while the close family member who's calling is not our customer, but we have a good sense as to who this person might be. So that's how digital and data is evolving.
And it'll continue to do so. And one of the sort of extensions to that, which I personally like to follow, is within the so-called health tech space, wearable devices are catching steam like how. And every smartwatch maker today talks about their ability to get your blood pressure and all of the rest of it without any invasion of the body as such. Now, obviously, the first sort of impact of this has been in the health insurance space. But I imagine as a life insurer, with this richness of data and the insight you have into my daily fitness habits and so on, it'll also allow you to price your policies better, maybe segment the market in a different way. Are you folks thinking along those lines at all?
Absolutely. Every kind of innovation in our journey does help big time for us to understand who's this customer, what is the profile of this customer, and to your earlier question about digital, there's a lot more of anonymity as against having an in-person interaction with the customer, and so even more so for us to understand through a lot of these through these data points that we can get without ever having met the customer in person. We are able to assess the risk, as well as, to your point, can we give lower pricing, can we give a straight through underwriting, that sort of experience. We have a data labs in Bangalore. We're perhaps going to even look at some of the other locations, and for us to look at how, say through voice, we are able to connect dots as to who's this person. We do have today a pilot running wherein we say my voice is my passport. We use face sense, for example. So for us to know, because we're looking at maybe 10, 15-year policies or 20-year policies, the guy who's given his Aadhaar or any other identification, he's not going to look like that 5-10 years down the line when he walks into our branch. So face sense would both gamify to say, for younger people to say, you know what, this is what you're going to look like when 20 years from now, so to get them to nudge them to buy a policy, and also the guy or lady who walks into the branch, and for us to figure out, okay, this is what this person must have looked like several years ago. Age timer is another one wherein this displays age-based photograph of what it's going to look like. Or we have developed a vision.ai wherein we have a bod meter that based on the BMI, based on the photograph, so that we have a good sense as to what the height and weight of this individual might be, or even other aspects, sentiment analyzer of this individual. You mentioned wearables. Wearables are right up there. Can we give a differential experience to this individual? Retina scan to figure out through diabetes, also to have proxies, and this is something that we're in the process of developing. Proxies to figure out as to, does this individual have any heart ailment, for example, without this person visiting a full-fledged hospital. These are all new tech solutions, and these are all part of our underwriting journey. But very interesting space. You would have read also that we partner and under our Futurance program, wherein we assess several startups, several ideas, see what might be relevant for us, and then give them some data so that they can play around with it, and then we can see whether there's a use case for us.
That's amazing, Vibha. Anyone who tells me again that insurance is a boring sector, I'll point them towards this 5 minutes of our conversation. Best of luck there. But let me just ask you this, and I guess this is really for the benefit of your peer group in the CEO community. When you're doing all of these things, you've set up a data lab and you've got these engagement programs. Internally, how are you operating this? And what I mean by that is it being set up as a separate unit with a different leader? Or is there a different structure that you've put in place? Do tell us here.
So we started off by having entirely a separate team. And this was important. Under our construct, our regulatory construct, we can't have a separate subsidiary. We just can't have that in terms of 100% subsidiary. So the next best thing was for us to have it as a division or a department, call it what you may, but we have separate HR policies. Some of that might just seem like fluff, but these are important things because you are attracting a very different startup kind of a talent. So not to have the big corporate, full bells and whistles that you would normally have, leave them alone. Have a differential compensation. They can dress how they want within decorum. The look and feel of their area was a lot more younger. Colors were younger. You had, various things. You had like an exercise ball. You had, open spaces of, fun stuff happening. Also flexi hours. So all of that, so that to have the next best in terms of creating an
wonderful
ecosystem. And also we kept it separate. So it was a light touch. Yes, they have to be compliant, but we didn't, bog it down. Otherwise, there's a tendency to kill an idea even before it's born. And we were very, very conscious of being a big company that would end up doing that. So light touch in terms of ROI, light touch in terms of what they can do, can't do, and so on. Today, while they're still kept separate, they have, they've come into their own. They know what's to be done, and we will expand and continue to invest.
No, Vibha, that's absolutely brilliant. And this at HT also, by the way, our CEO set up a HT Innovation Labs where they've now created 2 new businesses for us, which are now on stream. One is in the sort of the food area, it's called Slurp, and another one in the OTT space, which we call OTT Play. And if he were here rather than you, it's got pretty much the same narrative in terms of the structure and why it was done that way. So I guess it really, comes through from the old sort of disruption and innovation theories that had come out of Harvard, back in the days, and it's obviously proven to work. Yeah. Um, and I guess this builds upon a lot of the other stuff that you were talking about earlier in terms of the digital investments you've made and so on. And I just want to ask, in terms of your partnerships with the tech industry, right? So there's the startup side, but there's also big tech. The likes of Amazon Web Services, the likes of some of your system integration partners. How much have they been able to contribute to this journey for you?
We do partner very closely. You mentioned AWS, and we have a whole host of other marquee partners. So we are on cloud. A large almost chunk of our processes are on cloud, and we would not have been able to partner with our new age ecosystems, wherein you're processing anything, say 25,000 policies for a customer a day, and so on, and even higher when you aggregate all of them. So cloud was almost essential for us to innovate and have that underlying base on which we can build on. And also a whole host of things, the gamification, but it is not all from outside in, or it's a partnership. We do have our core team, and we do cherry pick in terms of partners, because we also believe there is no one size fits all. So if I'm looking at AI ML, I might even partner with some of, say, a UK company or someone from, an Israeli startup. It really depends on who's doing a lot of interesting work in that. Are the economics something that work for us? Is there a long-term play? Because you might not get it right the first time round. So it's a combination of all of those. So it's a combination of both the big players in the tech space, the smaller ones. I talked to you, we have partnered with Ivy Camp on Futurance to evaluate a whole host of startups. And now, because we are known to work and do interesting things in this space, in the insurtech space, we also have direct reach out by a lot of companies that we do evaluate. So it's really a combination of all of the above.
How interesting. But let me close by leaving our audience with your thoughts. We are now transitioning from this terrible 2-year pandemic era, and many parts of the world have now declared it to be an endemic, and kind of they said, let's learn to live with COVID.
Yeah.
India will no doubt, well, hopefully, fingers crossed, make that transition soon as well. How do you see the insurance companies and the insurance sector overall kind of coming through this? What are the new realities that you're planning for? And how do you see it playing out?
So whole host of things. I think I always see the glass half full. And so against the pandemic, it's really propelled the need for insurance. Today, unlike, maybe even 2 years ago, pre-pandemic, I don't hear anyone asking, why do I need insurance? It's now progressed to what sort of insurance, how much do I need? So very constructive questions. So we can't waste that opportunity. And if you overlay that with innovation both in terms of what we sell and how we sell, and also how do we have a digital native, because right now the industry has been trying to largely force fit what we have into what we want a way forward. But this is a chance for us to build ab initio, at least for some of our new things that we're doing, completely from a startup with a digital born again mindset. That becomes important. I also see work from home and the HR aspects, gig economy, youngsters who have never stepped into an office, who've joined our workforce and will not. The great resignation is part and parcel. So how do you still excite them to work from wherever they want to work, at whatever time zone they want to work, but to deliver? So not to have a certain mindset in terms of this is the only way we knew it, and there are downsides. There are downsides to all the different types of working environments, and for us to be flexible, and flexibility, nimbleness, trying out new things, because out of every 10, maybe 2 will work, and to be cognizant, to kill some of the ideas very quickly and to start again, not to belabor whether we did it well or not. I think these are all mindsets that hopefully we have most of them at HDFC Life. But I think we are very cognizant of the opportunity we would lose if we are not agile.
Wonderful, yeah. And to conclude from my side, Vibha, HDFC Life is going into 28,000 plus pin codes, taking its products to 2,000 plus cities. And it's very clear that you have a very clear headed vision about how to leverage the cloud, data, the technology platforms, your partnerships both with startups as well as with sort of the big tech companies, and really keep your people energized and your partners energized to keep winning in the marketplace. It's been an absolute pleasure speaking with you, Vibha Padalkar. Thank you so much for taking out time for us. And with that, I'll bring this episode to a conclusion.
Thanks a lot, Jaideep. Wish you the very best.